There is a bitter cold storm on this stock market. Even pros are struggling to keep up their capital on this market. So, is there any hiding place for these little guys and little families? These little families have very little money, hard-earned money to invest. And is there any stocks to buy on this stock market? Welcome to Run Up Stocks to Buy channel. Before we jump into, this is not a financial advice. It is for educational and entertainment purpose only. So, how to invest as little as 5,000 in the stock market today? First and foremost, invest in you. So, you are the best asset you ever can find. So invest in you as much as you can. Sharpen the saw. That's just like Stephen Covey finally said that, sharpen the saw. So we always try to improve your skills and knowledge. So you can find so many places, and you can search in YouTube and other places to find nice place to improve your skills. For me, I found Course RA, which is a knowledge and skill improvement site. CourseRA.org. You can find a free course to any subject, any knowledge, or any skill you want to improve. It's Course RA, and most of the courses are free. And if you pay $49 a month, you can get a very nice certificate. It's not only simple certificate from the college. There are so many Ivy Leagues schools which you can get certificates from. So if you don't have $49 per month to invest, what you can do? Time. Time is the only thing. Time is not only money, and it's also a medicine as well. So time, if you are ready to spend more time, little bit, and you can find all the resources. For example, if you spend quite a bit of time in the YouTube, you can find all your skills needed for free, but it takes a little bit of time. So it is a good time is a money. So time is not only money, it is also a medicine over the long run. In general, how to invest stocks. If you are already having an account and you know how to invest, then you can skip this introductory section, and you can directly go to ETF and covered call section. First, opening the account is the biggest leap you can do the thing in your investing journey. So it's hard to open the account. Once you open the account, it will be easy going forward. A penny saved, a penny earned. It's a saying forever true. As much as you can save, it's a part of earning. Set aside little portion of the income to invest. So you always make a small portion, at least a little bit, towards the investment on your income. For example, you can have $25 or $50 or $100 every week set aside and to invest. For example, you can set a recurring auto payment. In that way, you will not see the money in your account first, so it will automatically go to your investment account directly. If you see your money, and you will be tempted to spend it, so that is always a good practice, that set aside directly to your income account. Invest regularly and consistently. So there is a strategy that dollar cost averaging. You do invest whether the market is up or down. In that way, you are buying more and more stocks or ETF, and your probability of succeeding well will be the great chances. Invest for long term. Yes, you can make money in the short term as well, but always look for investment for the long term. 401k and Roth IRA. Uncle Sam is encouraging you to do and Roth 401k. From this year, Federal announced that every employer has to put 3% 401k on each employee. So you are forced to invest in your 401k, which is Uncle Sam is encouraging to invest in everyone in for the 401k. Invest in your 401k up to the full match. If your employer providing 6% match, then put your 6% completely. Then you can have free money. Then you set aside, create a Roth IRA, which is a tax free on your retirement. You pay tax now, but when you take the money, then it's tax free. So open a Roth IRA versus traditional IRA. You may think that you are saving a lot at this year or current year, but eventually, if you are looking into the long term, then Roth IRA might be the right choice. It will be the best savings you can make. If you like so far, please click that subscribe and like button. That would be helpful for me. To open an account in Robinhood, go to robinhood.com, and then just click the sign up, and you will be redirected to this page. You can enter your first name, last name, and then your email address and create a password. When you click continue, it will send the email verification. Once you verified, and you are all set. And the Robinhood does not have a IRA account right now. They are working on it. The IRA account will be available pretty soon. But if you want to go to Webull, they are having an IRA account. You can go there in as well. You can create the same process as sign up, and then you can create your phone number and verify. It's pretty simple and straightforward, and easy process to create an account. Once you set up your account, it's easy to fund it. So just go to transfer and set up, add a new account, and there you can set up your account through their easy widget. And then once you set up the account, you can do recurring investment. Just go to accounts and recurring. There you can create a recurring account. We are not going to put it in stocks. We are going to invest in ETF for this video. So just go to ETF, create a new recurring, put it, type SPLG. That stock will open up, and then you can enter $50 per week. When do you want to start it, and what is the account you want to choose it. Review and submit. You are all set, and you will be setting up your recurring payment from your bank account to Robinhood every week seamlessly. That way we are investing regularly and consistent. We are going to invest the 5,000 into a ETF. ETF is nothing but all the stocks, portion of all the stocks is being taken from the S&P 500 market, and you will be buying portion of each stock in that market. The ticker symbol for that market ETF is SPLG, and the ETF It's basically trade like a stock in the exchange, so you can buy and sell anytime. In not like a index fund, the index fund or mutual fund, you will be able to do the transaction at the end of the market, which is not the case in the ETF. Why SPLG? SPLG is having a very low cost expense ratio. The current expense ratio for this ETF is 0.03 percentage, which is very low in the market. Why SPLG? It's broader and diversified because it reflects and mimics the entire market, and it has all the sector and all the industry. So it's very broader and it's very diversified. So we won't lose in a when investing in a stock or a sector ETF. This is a very good option to consider. Why SPLG? Let's take a look at the historical return. So if you look into the 1 year return is 4.68, and 3-year return 15.32, and 5-year return is 15.29, and 10-year return is 14.26. So it is above the market return, which will give us a boost to improve and get a nice profit on our investment. Why SPLG? Let's look into year by year historical return. So the maximist the return on 2019 32.06 percentage yield, and the lowest is 2008 36.90, which is the less. But if you look into here, there is a only two year which has posted a negative or loss in the market. So it's a very good option to consider. So we can invest in SPLG, which is having the $47 right now. So we can invest our $5,000 calmly and worry free. Why SPLG? Because it's diversified and broader and also mimics the entire market. Eventually, the market will not go down as a whole at any time. So it's minimizing the risk. So it's very safe to consider. SPLG covered call. If you don't know covered call or call option, don't worry. I'll be making another video on the covered call and call option a little later. But if you have a call option, you can write it. Call option is nothing but a contract. If you have a call option, then you can sell the call option, which is covered call. So this call option will be available monthly and quarterly. In our case, we are looking into monthly, quarterly. September, right now we are in May, so we are going to look into the September call option as well as December call option, but we will be writing every quarterly. In that way, we will be trading only 4 times a year. So that's why we are going to look into the quarterly covered call. So for this September covered call, we have to look into 10% above the trading price. So we are looking into the strike price 52. The stock is currently trading at 47. So we are looking for a 10% profit just in case if the market is running very quickly and it makes a nice profit about 10%, then we can take a 10% profit as well as the premium we got by covered call. In this covered call for 52, 10% above the strike price. We are seeing 65 bid and 80 ask, so we can get it by around $70, which gives the nice 1% premium for the trading price. So if we do it for 4 quarters of a year, we will be getting nice 4% without, even if the stock or market doing either way, either it's up or down, we will be getting more than 4%. So that way we will be above and beyond the market return. So that's all for today's video, and hopefully this helps you. So thank you for watching.